Hi, welcome to another episode of Passion for Property with me, Manni Chopra. And today's guest, I'm definitely a huge fan, firstly. Secondly, he is a property genius, makes data look very sexy. He actually has a degree from the real Oxford University, a PPE. And he's the Dean's Scholar from Warwick Business School as well, with an MBA. He is absolutely the one and only Adam Lawrence.
Thanks for having me, Manni. I'm blushing already.
Adam, you can tell I'm a big fan, right? But look forward to your podcast every other week, the Sunday supplement, and absolutely love it. And I just want to talk about your life. How did you start in property? You've been doing property just under 15 years now, bought and sold over 850 properties. That is a lot of properties, right?
Yeah, that's a fair bit, yeah. Fair bit.
And tell us about how it all started for you in terms of property and life before that, a little bit as well.
Yeah, so I guess, like everyone, unless you're the Duke of Westminster or whatever, I started with none and I got to one and I carried on from there, really. So it was relatively late in life, and certainly when it came to opportunity, I hadn't done anything of meaning. Before 2008, I bought one property in 2001 alongside my brother. I lived there for a while, exited that because I left the country for a couple of years. I lived in Switzerland and then came back and made all the mistakes you could make in one go. So I bought a new build with the wrong partner in 2006 at the top of the market. So we had the pick of the plot, paid the full asking price, part exchanged her house into it. You could not make any more mistakes. But luckily, without realising, we had a tracker mortgage. So when we parted company in 2008 and realised we couldn't sell it, when the interest rates started going all the way back down in 2009, we were in a position where we could rent it and make a pretty good cash flow profit, actually. And the agent we had instructed, who will remain nameless so you don't get sued, would basically bribed us into saying, well, we can rent it for you because we can't sell it at the price we told you were going to get. So they did, and then at some point down the line tried to charge about 300 quid for replacing a part in the washing machine. And at the time I could replace the washing machine for less than 300 quid and thought, they're ripping us off. I'll just look after this myself. So that was my accidental landlord. So that
Life.
sort of takes us to about 2010. And then 2011, I'd been doing a variety of different things, almost all. So I did a couple of years in Switzerland, so that was in wealth management.
Right.
So I worked for boutique firms, managing ultra high net worth, building portfolios, the sort of stuff you get kept in the back room doing in the dark, the data
Building kind of
geek
property
stuff.
portfolios, or
No, so if we had real estate exposure, it would only be through funds. So
Right.
it was diversified portfolios. But Switzerland at the time, and I'm sure today, was miles ahead of the UK. So they were already into index funds and all these things we weren't really talking about. I mean, Barclays had an iShares product back then, but it was a really niche thing. Whereas now lots of people know what an index tracker is, and they use that for their own stock market investing if that's their thing, So it would be commodity funds sometimes if we were hedging against exposure, or we're looking at things that weren't correlated.
Stock market related investments.
The idea was we built stuff that was robust and it would perform on the way up. And although I'd left the industry by then, when 2008 came, I was very proud to say the portfolios that I'd built lost about 6% over the course of that 12 months, which I don't suppose anybody's that proud at losing 6%, but in the face of what happened, they did their job.
Absolutely.
The diversification did its job.
It was a robust portfolio that you built.
Exactly. It was built for killing variance, but also so it could make money. So that was lots of fun, very mathematical. I enjoyed that, but I also enjoyed talking to the people, getting to know the people and things like that.
And the mindset as well, right? Of these rich, ultra rich, high net worth people.
And Geneva is a funny city. It's very more than 50% expats. So there's all pockets of all sorts of communities, whereas the Swiss community is fairly tight, fairly isolated, quite hard to crack into. So it was a funny experience in a way, but it's a great city. I mean, phenomenal in terms of the air quality, in terms of the cuisine. It gets the best of the French and the Italian and everything. I mean, it's fantastic.
And the arts
like that.
and the music and all of that.
Beautiful,
right?
Beautiful. And the scenery, when I came back to the UK, we actually drove back because I had accumulated some stuff and drove back through the Alps and did that. And that was,
stunning.
Really breathtaking. Yeah,
it is stunning. It's a picture postcard wherever you look, right?
Yeah, beautiful part of the world. And but enjoyed it, but ultimately made the decision to want to come back. And then, as I said, made those mistakes with the house that I bought. Wasn't involved in property day-to-day at all at the time. In fact, I was running a betting syndicate on a day-to-day basis. So a bit like a baby version of trading options and things like that in the city,
Right.
but with sports bets. So we didn't really bet. I bought and sold bets. So in the same
So like
way
the
that
big
any
matches,
market
like
works.
for example, like England versus Australia.
Yeah, well, one of the best ways to explain it is in certainly in the early days of the internet, bookmakers are pretty slow to react to things. And so in the old days, in England, you would get much shorter odds on England winning that match, and you would get much longer odds on Australia winning that match.
Yeah.
But of course, what the internet does, it enables you to go to an Australian bookie
Yeah.
where they will put much shorter odds on Australia and longer odds on England because they know where all the money's going to go. So one of the things that bookmakers do that people don't necessarily realise is they gauge where they think the money will go. So the odds they offer don't necessarily reflect the probability of the outcome.
But it's where the money is going.
Exactly. But if you could bet on Australia in England and England in Australia, in the
you
early days
hedged
of
your
the
bets, as they
internet,
say.
you're guaranteed to make money. You might make 1, 2, 3, 4%, which might not sound like a lot, but when you think there's an event that takes place over a day, I used to do quite a lot of horse races, so they were a few minutes long. So even a fraction of a percent gain in a few minutes, your actual rate of return is
And it's
off
a volume
the chart.
as well, right?
Exactly.
You're doing it.
My rate of return on the money that I started with was thousands of percent a year from actively trading that in the first place. But that's like, it was thousands of percent because I didn't have very much money.
Yeah,
so if I'd started
fair
with
enough.
£1 million, I wouldn't have made the 100,000,
Yes.
£1 billion in a year because I wouldn't have been able to get that sort of liquidity.
Yeah.
But I did okay doing that. I knew it was never going to be. It never was a long-term ambition. I knew it couldn't hold up as a long-term thing. I followed a few different pathways doing that, had a lot of fun, made some money out of it, made a good living out of it while I was doing it. But I knew I wanted something more stable. So we sort of fast forward to about 2011, 2012. I was looking around at my options. One of the things I thought was I wanted to do an MBA, but also we'd had the crash.
Yeah.
I had never seen the no money down days and all the wonderful things.
The same day remortgaging, cashback, and all of
I
that.
had no idea about it. I'm gutted that I didn't, but I never knew about any of that.
Tell me about it, Adam.
But in a way, it didn't get in the way. Yeah. So I didn't have that knowledge sort of built up. I just knew there was property and
75% loan to value. You pay mortgage. You get interest.
it's going to go up over time. The interest rates were lower.
Yeah,
they were
they
much
were.
more reasonable. The rental market was buoyant. You could buy properties at the time without too much. I wouldn't say too much effort. I did put a lot of effort in. But I mean, through agents, I was buying properties at the same price they traded at in 2004, in 2012. So as a simple yardstick, I thought, well, there's 8 years there where it hasn't grown in theory. But if you remember, between sort of 04 and 07, it rocketed up in value.
Absolutely.
So although it had come back down a little bit, it was a very flat market and you could buy, you could get fairly
deals. You get good
easily.
deals. So were you buying below market?
So, yeah, I did a couple of deals there that were genuinely 25% below on the revaluation. And then I did a couple where there wasn't that sort of discount, but yield-wise, they did quite well.
Yeah.
A couple where we improved. With one that was a failed flip that we ended up holding on to for a while and exited.
Just rented it out.
Yeah, and exited when the market had got
And
better.
how were you funding these deals, if you don't mind me asking?
So the first ones, I refinanced my house. So I split the
The
money
new
that I
build.
got from that. No, that was
different.
still being rented. I was in another house. So I did negotiate to buy a house in May 2009. So that bit of timing, I was pretty on it and thought, so I was in rental after I split with my partner from there for about a year. And then while I was in rental, I was using that to look at places, looked at 30 or 40 places, but places had dropped in price 30% in terms of their marketing prices, or certainly the one I bought, I ended up, it was sort of mid 450s, I think it was initially when it hit the market, and I paid 320.
Titans is a property education and collaborative platform, which is effectively a community of property professionals, investors, developers who like to come together, connect, engage, and help grow each other's businesses. Find out more, teamtitans.co.uk.
And I probably could have paid 310 to be honest, but I paid 320. So I had a huge uplift in that on the way in. And then by the time things had calmed down, by the time it was 2012, I could refinance and release some equity. So I did release that equity, and then I spent it, and then I didn't have any money. I had some cash flow, but I didn't have any money. So that's when I really started to have to really
Be
learn.
creative, yes.
Other people's money was the first route that I went down because I'm reasonably good with people. I had business connections from other places, and
The Oxford connection.
and
maybe?
I have used that probably less than I should have done over the years. Although I've definitely have done business with people I went to university with, but this one was back from another business from years before. Business partner happened to get. We'd stayed in touch, and he said, "We've just had an inheritance. We've got £500,000. We'd love to put it into property. I want to work with someone on it." Basically, he said, "I want you to do the work,
And
I
I'll
trust
put the
you.
money in."
I'll put the money in." And luckily, I was still pretty green back then, but I was pretty good at managing his expectations. So we bought a deal. I thought I'd done all the de-risking that I could.
Yeah.
It was in receivership. It was a really nice deal in that, well, you tell me whether you think this is nice. But when I say nice, I mean not a lot of people were interested in it. So it was approved 2007, built 2008, repossessed in 2010.
Right.
Asset managers, so it was 2 shops and 10 flats above. Pretty good. Not the architecture wasn't inspiring, but it was a pretty good standard build, right? And so these guys had, the asset managers had decided in their infinite wisdom, evict the tenants, because it's what they normally do. But there were 3 tenants that they couldn't get rid of. So there's 10 flats and 2 shops. So 1 shop is tenanted and 2 of the resi flats were tenanted. And so it sat in a nice sort of twilight zone. A, it's mixed use, so a few people are knocked out.
Yeah.
B, it's a block, so
Yes.
entry-level investors are knocked out. C, it's not fully let, nor is it vacant.
Yeah.
So then you've got...
How do you kick the existing tenants out, or is
You've
there a
got stuff
problem
to,
with
exactly. You've got stuff to do. So it starts to appeal to nobody, which is why it appealed to me, because I thought, right, we'll get a good discount here. So we de-risked it as much as possible. We were buying from receivers, but we got a valuation done. The valuation said 600 to 650, and we'd agreed 462.
Oh, wow.
So I'd still do that deal today,
Yeah.
right? Great deal. And fully let, it would do about 55k, I think, rent at the time. So
10% gross
pretty
yield
good.
or more,
Pretty good,
more.
right? So we did the deal. We didn't have to spend a lot. We spent about 10k. We put some CCTV in. Obviously, this block was still very nice. You know, we did give the communal areas a bit of a refresh.
Yeah.
Did a bit of landscaping. That was it. And filled the flats without a problem.
Yeah.
Filled the flats. Actually filled the shop without a problem. And then it was doing its 55k. Took it to a lender that we thought, well, there weren't too many options at the time.
Yeah.
So it's about 2014, I think, who would lend on mixed use. And I was obviously just nowhere near as savvy as I am today with that stuff. So probably had the wrong broker, to be honest. Ended up falling out with that broker down the line because she told me that getting involved in social housing was stupid and you'd never get mortgages on social housing properties. Luckily, I didn't listen to her, but that's why we parted company. But basically, Shawbrook, it was, valued it, had it valued, and it got valued at 500k.
Brilliant.
Even though we had a 650 val before we'd done the improvement and before we'd let everything. So I'd managed my business partner's expectations and said, look, this could happen because we bought it cheap. They don't like what we've paid. They don't want us to...
It's still valued more than you bought it for anyway.
It did. But if you think about it, that was the time when a lot of the problems have been caused by people re-gearing stuff.
Yes.
So the truth was they told them to suppress the valuation.
Yeah.
So we sort of screamed blue murder and all the rest of it. But my business partner was okay with, so we were able to pull out, 375 or whatever that was. And he left some money behind, but we dedicated...
Great cash flow, right?
We dedicated the bulk of the cash flow to paying him back.
Yeah.
He was happy enough with that. And we went on and did a few more deals that we still hold today.
And you rented those to...
That look great. That was just private market. That was private
PRS,
market. And the two shops are, complementary businesses, aesthetics businesses that it suits them to work together, sort of thing, if you like. And PRS tenants. And in fact, the 2 resi tenants who were in there when we bought it that the asset managers couldn't get rid of, there was nothing wrong with it. They're still there. Yeah. They're still there today. So very sticky tenants.
But paying their rent and...
Yeah, no issues.
Yeah.
No issues.
So that seems like one of the great
it was
deals.
It was a great deal. Apart from the mortgage didn't, and in these days, well, I would have employed all sorts of different tactics these days, but probably would have gone for a different revaluation or a different lender.
Yeah.
And in fact, interestingly enough, or this is the sort of thing I'm interested in anyway, one of the things we did with that when we refinanced it was something fairly unusual, where we pulled the commercial units out on a lease.
Legally, you separated the titles.
Yeah, but we kept the freehold with the resi, even though the resi is above the shops. That's
Right.
unusual. Why did we do that? Because it enabled us to access a multi-unit freehold block product
Yes.
at a lower rate. And actually, because commercial retail, what's it worth? Not a lot. And do you want a mixed-use product when 80-90% of your revenue is coming from resi?
Yeah.
Not really.
Yeah.
So it got the price down, as in the interest rate down, and we didn't even need to encumber the commercial. We were happy with what we
And you
had on the
got
resi.
some money in there in case you need to leverage it at a later point.
And of course now it's, worth I don't know, thick end of £1 million or whatever, like always, when you've been in there for a long time, and now the cash flow is 70k a year. Well, the top line is 70k a year or whatever. So it's decent. It's been a decent investment.
So like 2012, not that long ago, to 2025, 850 properties later, you've been on some sort of a treadmill, or have you been on a supersonic jet, or how have you, amassed all these properties? I mean, it's incredible. How has this journey happened so quickly?
Well, I think I probably could and should have done more, to be honest with you. But one of the things I did in 2016 was I went on a business retreat, and I knew that I was doing okay, but I felt that I didn't know what I didn't know, if you like.
Yeah.
And it wasn't really so much even about the amount of knowledge that I picked up there, although there was plenty of knowledge there. It was more seeing the mindset of people who were ahead of me and thinking, it really changed my focus on things. And one of the things it also did is give me a push to start using bridging finance.
Yes.
So I hadn't used it.
You were using traditional mortgages.
I'd used investor money, traditional mortgages. I'd borrowed money. I'd used other people's money, absolutely, but I hadn't bridged. And I found that was when you got to sort of 2016, you'd probably had the vast majority of everything getting cheaper.
Yeah.
But you also had the options for bridging lenders were exploding.
Yeah.
And they would do deals at 90% of purchase price, even 100% of purchase price if you got stuff
Additional
cheap enough.
security.
So not with additional security.
Below
So
market.
as long as you were below market enough, yeah. So
they would lend on the market value of it.
yeah. So that would really stretch the amount of equity we didn't have to put into a deal, which let us do more deals.
Right.
So
it's kind of a roundabout way. The 100% mortgage in a different.
Yeah, I guess so. I mean, obviously with those, we still had to mostly keep them for 6 months before we refinance. So it wasn't
and also
day
get
one.
them below market, like really below market.
Getting the deals was always. So I figured out pretty early on that getting the deals was because I had the relationships and I could raise financing and things like that. I had that bit covered, mostly because I think because I've got a financial background, people trusted that my numbers added up.
And your business background and your everything else together as the package, right?
Yeah. But deals was the scarce resource. But I spent so much time networking and doing things like that, and noticed that, like in lots of games, 1% of the people were doing 90% of the deals.
Yeah.
But these were people who were flipping lots of places on, trading. And I thought it just seemed simple to me. If you got people who want to sell through auction or sell property, they don't want to hold, they don't like tenants, they don't want to do that. They just look at houses like apples, right? And if I can buy them from you at 7p and sell them to me at 10p, I've made my turn and I'm happy.
Oh, so you're buying from auction traders, yeah?
Yeah, absolutely. So auction, below market traders, direct to vendor traders. And I thought, this is a match made in heaven. They don't want to hold it. I want to hold it. Great, I can solve the problems. Now, of course, it's not as easy as that, right? So you've got to be careful because they're very, very, very knowledgeable. And also, they don't necessarily know that much about the property that they're moving on to you. They know what they're paying and they know what they'll accept. And they've got a rough idea what they'll take at auction.
Yeah.
And they're business people. If they think, well, it might get 70 grand at auction, but Adam will give me 67 tomorrow, they might take the 67
Yeah, but the certainty.
Tomorrow. And the speed.
And the fees as well, because you're going to have to end up paying fees.
Exactly.
So you probably end up being at 67 anyway.
And so to an extent, it also depends how much and they're smart, right? They've done lots of auction trades. So they know what may have a big upside at auction, but they also know, take a bit off the table before a bit like the same way the auction house works.
Yeah.
Sell some beforehand, sell some at the auction, and sell some after.
This podcast is sponsored by Ease AI Agents, a game-changing software and platform for property investors. Ease AI are redefining the way due diligence is done, helping property professionals work smarter, not harder. Ease AI uses advanced AI to analyze deals, leases, and review auction legal packs in just a few minutes, instantly spotting red flags and highlighting what really matters. And the best part is you can interact with the auction, leases, and packs. Whether you're a deal sourcer, investor, or auction buyer, Ease AI will accelerate your progress and help you move smarter, faster, and with more clarity. Great news! You can try it completely free without your credit card details, giving you 300 free credits. If you go to easeaiagents.co.uk and grab your 300 free credits and get your free trial started now. I've been using AI and honestly, I absolutely love it. It is a great time to invest in property, as we know, and it's all about a numbers game, guys. The more deals you do due diligence on, the more you can offer, and therefore the more success you can have in property. Go and try that now. Thank you. So you've got this big, quite a lot going on at this point in time, right? You've got this, you're buying like in 10s, 20s, 30s, whatever, hundreds almost in a year.
Yeah.
And then you've got this investor money. You probably have some of your own money you're leveraging as well.
Yeah.
How did you manage all this? When you say you, is it the same investor that you started your business with?
No. So a couple of helpful conversations that I had over the years. I had a conversation with a consultant maybe 10, 12 months after we'd done that first block of flats deal.
Yeah.
And he said, that's great. The chap that I've been working with was called Andy. And he said, well, what if Andy goes under a bus? What if Andy gets divorced? What if Andy... And I thought, he's right, there's a lot of dependency that I've created there. So I knew that I needed to create more relationships to kind of hedge my bets. And the way that Andy was comfortable with that, and also my mentality was, if I'm going to share the pie with multiple equity partners and things like that, I'm going to need to do more deals.
Yes.
Because if I've got a third of a company, we need to do 3 times as many deals as I can do on my own.
Absolutely.
Right? But what does the benefit of doing the 3 deals give me? Well, it makes me bigger faster.
Yeah.
So I can have a letting agency.
Yeah.
I can have this. I can have that. And I've developed a services company that can do
the maintenance,
day-to-day, or the property management, the tenancy management, all of that.
And it's all
stuff.
feeding into this ecosystem of businesses that you've
That's
created.
the cog that sits in the middle. And it's not that business is phenomenally profitable. No. It's a solid business. It's a steady business. Lettings, as a rule, is a steady business.
But it services the rest of your businesses, keeps that on track.
Yeah, and investment companies need services. Yeah. And that you don't want to be employing people in investment companies. You can't afford to for a long, long time down the track. That's why so many people are stuck at that level of they're on their own sort of thing. So I kind of leveraged that and just accepted I would have to work harder to do more in order to then get those advantages in place, which would let me do more, which is the way that it's...
And what is it that you enjoy doing the most in this business then?
Oh, I still enjoy doing deals. Yeah. I really enjoy, and I do enjoy, especially when they're deals that really help people. People don't understand. A lot of people think that BMV is about ripping people off and things like that. And it's absolutely not. We've had some amazing feedback from people where we've really helped them out of a jam, And I've got friends who are BMV traders who've literally talked people down off buildings, who were going to throw themselves off a building because the property was causing him that much
was getting
hassle.
Repossessed.
And look, we all know if property can be as bad as it can be good. Once things are on top of you in a project, it can be really difficult to solve problems. So there is a real genuine that side to it. But I love doing deals. Yeah. I love things that add up. If the vendor has walked away and are happy and you're happy, you've done a good deal. You've been in that zone where you can live with the deal.
Like you said, creating those win-win solutions.
This is it. I didn't realise for many years, what my first question, I think most people who are perhaps listening to this who are a little bit earlier on would think, well, why does anyone ever sell anything below its value? Yeah. Right. And I can give you 2 answers to that. Yeah. One is the price has basically become secondary. Yeah. Because the certainty or the speed that you can offer, or that a trader can offer, for example, is much more important to them. It might be, I shared a post on social media about auction properties at retirement places that have got huge service charges. People inherit these all the time and they don't realise there's £1,000 a month service charge. Yeah. It's a liability.
Yeah, massive.
It's not an asset. It's a liability. And people don't realise until that happens to them, sort of thing. And then the geeky technical answer is, well, if there's a reason why an RICS surveyor calls it 180-day value, because it's an arm's length transaction that takes about 6 months to happen between a willing seller and a willing buyer, right? If you're going to shorten that 180 days to 90, to 45 at an auction, let's say, to 7, to 1, which is my personal record where I bought stuff in 1 or 2 days before, then the price has to come down. Yeah. It's a factor of the risk, the extra, because all you're doing as the buyer is you're loading on more and more and more risk.
Yeah.
And the way that you manage that risk is you have to get the price down. Otherwise you're...
So you're saying from 180 to 1, for example, is the price, you're getting a better price.
It's a savage curve, especially towards the sharpest end of that curve. But quite often, in a good example, you mentioned repos and things like that. You know, if people get repossessed, they don't realise sometimes it can follow them around for 20, 25 years. I've seen, you know, old charging orders surface when people are trying to sell a new property when they got something repossessed back in the recession of the 80s and early 90s. So avoiding repossession and walking away with something might be a fantastic result, because the only thing otherwise, the asset manager and all the fees and everything else, they just swallow everything. They'll swallow everything, and you'll be worse off than you would be if you moved it on very quickly to a trade.
And also the credit, your credit rating.
The credit problems, absolutely. So again, they're gonna stay with you for 6, 7 years.
It's a good thing, you know.
Whatever.
It's like we're not vultures, we're not greedy developers or investors. I think we're doing, you know, it's a business. Of course, we've got to make money in it, but it's a win-win.
I think that the problem that the people more maybe on the left-hand side of the debate have is that they don't accept that it's a business in the first place. But I struggle with this, and I've written extensively about this when people talk about landlords take properties that other people otherwise would have bought. And I think, well, on a personal level, that's never been my way. I've bought stuff that people don't want. I've bought stuff that's derelict. I bought stuff that needs converting. I bought stuff that needs changing in some way that a first-time buyer wouldn't buy or couldn't buy.
Yeah.
So I haven't done that. But in the broader macro side of things, when things were great pre-08, there definitely were houses and flats being bought that would otherwise have been bought by first-time buyers.
Fair enough.
Because the PRS grew massively. And that's what the data says. But since 2013-ish, that has calmed right down. And these days, it's trending downwards.
Absolutely.
And if everybody thinks that's a good thing, work out about what economics is like when you take the supply away and what happens when the demand is going up, which is still what's happening.
And that brings me on to the sort of the macro environment that we're in right now. And we've got the budget in a couple of weeks. So I'm sure you got your eyes and ears open and to the ground.
For sure.
But we'll talk about that in a minute. But the macro environment obviously is very negative right now in the UK, right? UK PLC, as we talked earlier. I think the shares, as you said.
The share price is lower than it probably should be, for sure.
But inflation is stubborn. Interest rates, hence, obviously, are higher for longer.
Correct.
We don't know where it's going at the moment. The businesses are suffering. The national insurance rises, the minimum wage. All of this negativity around, obviously, regulation is massively an issue.
For sure.
Renters' rights bill is now officially law. Tell us where are you? If say, for example, I made you Prime Minister, or let's say Chancellor of Exchequer for like a day or a week or a month, what were the top 3 things would you do to change or start to move around some of these macro data?
I think I'd probably rather be Chancellor, to be honest. It suit my skill set a bit better, because otherwise it's just going to turn into, we're going to get very political. So let's stick to Chancellor for the purposes of that conversation. There are 3 things that we need to consider that are very, very clear from an economic perspective. Number 1, productivity. And one of the problems that we're going to have in this budget is that the Office for Budget Responsibility, who basically set the framework of the game that the Chancellor has to work within, are going to downgrade the UK forecast for productivity. That is what's going to create part of this.
So not only is it talking about productivity has been low, it's going to downgrade it even further.
Correct. And every time they have looked at revising productivity, the graph, they call it the hedgehog, because the curves that we would have been on sort of spike up, but actually every time we're getting chipped and chipped and chipped. And that's happened many times over, the OBR have only been in place since 2010. So all the forecasts for productivity are down.
And is it because the public sector are a bigger part of the pie now than the private sector?
It's a good question, because the pathway since 2010 has been less public sector for a little bit, not much less, but less in comparison. And then more, especially, when we got to sort of 2019, we'd actually hit a reasonable balance And then, just like Murphy's Law says, COVID came along and it just blew. And not only did it blow up the public sector, it blew it up in one of the most inefficient ways possible. Rooms full of people in call centres with 3 calls to make in a day. National exhibition centres with 4,000 hospital beds. What's the productivity level of that? Incredibly, incredibly low. And then it introduces all that inefficiency back into the system that then needs to be cleared back out again. That's a huge project and so I do have some sympathy with Rachel Reeves when she blames COVID, although there was a lot of banter about blaming the Battle of Hastings and the Roman Empire and things like that. COVID was a big problem, but that's a productivity issue. But it's not just that. It's more, if you look at, if you took an example of a company like DeepMind, which is one of the UK success stories of recent years, they ultimately had to sell to America because of the volume they had to sell to Google because they needed that extra capital to really, really scale.
Yeah.
But by staying primarily in the UK, there's more startups in Cambridge than there are in Germany.
Oh, seriously?
Right, in the whole of Germany. So we still have an incredible culture around now where the money is going at the top end. We can all see it goes to the US, but it does, DoorDash by Deliveroo. Everybody uses Amazon. Where is that? But there's jobs, there's tax.
Yeah.
Everybody says, well, they don't pay their corporation tax. And that is true. And I would support a little restructure. The digital services tax, I think, is a good idea. But they don't get out of employers' national insurance, which is huge because their average employee is getting paid 150 grand, 200 grand, 350 grand if they're in Ireland, all the rest of that, which has literally boosted the GDP of Ireland to the point where they run an economic surplus these days and has dramatically changed the average fortune in Ireland. Doesn't mean there's not poverty anymore, because there absolutely still is, but inequality is an inevitable. The difference, that the fight between particularly Marxism and capitalism is ultimately someone like John McDonnell, who was Labour Chancellor, was a self-confessed Marxist, would say he would rather that everyone on average was worse off as long as we were more equal. Now, I think that's nuts.
Yeah.
Right? And that's why I'm a capitalist.
Yeah.
It's as simple as that. But productivity is the number one problem. We spend nearly no time talking about it, and that's insane.
So when
you need to get that into the heart of the people.
So when you say product for dummies, do you mean the growth?
So productivity is a key. If you don't have productivity, it's very difficult to sustain GDP growth.
Right.
You can have false growth because you can spend more money as a government.
Yeah.
We were always going to have growth this year because we were spending more money in the public sector.
Yeah.
And that's how GDP for dummies, C plus I plus G plus X. That's the sort of your basic GCSE level of consumption.
Yeah.
And that's a huge amount. 70% of the economy in measured in that macro in the UK, roughly 65 to 70, is C. G, government spending. Government spending is the second biggest, right? Then you've got the investment side of things, and then you've got imports minus exports as the final part of that macro formula that we look at, right? And that is GDP. That is what GDP is, the sum of all of those things.
Yeah.
But if you don't have productivity improvements, how does growth happen over time? How is it led?
Yeah.
Because what you can do is keep borrowing more money, which obviously is something that we've done, but then eventually the bond markets start to rally against you and say, well, hold on, in 30 years' time, where are you going to be?
Yeah.
Which is why our 30-year money is very expensive at the moment.
Yes.
And Rachel Reeves is not stupid. So she knows and understands all of this. This in the last 12 months has become much more important to the bond markets, right? Because that's why the yield curve has got so much steeper.
Because you're saying the borrowing, which apparently, and I read it somewhere in one of your Sunday supplements, is 2.5 trillion or
thereabouts. We're a bit above that these days. Yeah, we're a bit above that. So we're nearly at 100% of GDP. We're about 97% of our GDP. So I think we're at about 2.7, something like that. But now that doesn't,
and that's the debt. So that's the
debt. Yeah. So we've got to service that debt. It's just the servicing. We have no intention of ever paying that off in the real world. And
that debt is via bonds and gilts or via other.
Yeah, gilts is primarily.
So we've
gilts,
issued out 2.7 trillion of gilts and bonds.
Yeah, and they're primarily owned not by UK individuals and entities. So sometimes
foreign investors.
If you imagine, if you do a lot of trade with a country and they desire your currency, so people can sometimes think, oh, everything's in dollars in the world, but it's not. Everything's not in dollars. There's still demand for euros, which has gone up actually since Donald Trump's been in charge, and people have said, well, is he? I think the thing that people don't say about Donald Trump is there's a deliberate strategy to weaken the dollar But you would never see Donald Trump come out and say that because it would sound unpatriotic to his voter base.
Yes.
But they knew what they would do in weakening the dollar.
What happens then if they
And they've
weaken
done
the
that.
dollar?
Well, so it's making things cheaper for them to import, isn't it? Because and that's so what Japan have done since the 1980s, really. What China have done in controlling their currency is they've made it cheaper. So the dollar is strong, and then they hold dollars. So they think, well, we hold all these dollars.
Yeah.
Both Japan and China own over $1 trillion worth of bonds, right? If the dollar gets stronger, they make more money.
Yeah.
So he's actually reversed that. And you would never, I don't think I've read that argument anywhere online. No one even says it because either Trump, he brings so much emotion out of people. They either love him or they hate him.
Yeah.
Whereas really you should just assess what he does on its merits.
Yeah.
And people say, don't take him literally, but do take him seriously. It doesn't mean that he knows what he's doing in all these departments. Some of this has been, the tariff stuff is a pretty big experiment.
Yeah,
that hasn't really taken place for 100
at the moment,
years.
so we can't obviously talk about it. But
yeah, well, there's a site called Polymarket where a lot of the US you can bet on political outcomes, and it has a pretty good yardstick. And they last time I looked at Polymarket, it was saying about 70% chance that the Supreme Court are going to vote against the tariffs. So even though they think that just because they're conservative judges primarily that have been put there by Donald Trump, they're still judges, and they're still going to
have to rule by the law.
They cannot compromise the rule of law. Look, there's law's opinion. Law is an argument, right? But if they feel like that, they think it'd be about 6-3. Because there
against.
that's the. But we never know.
We'll see what happens as a result of that. It's going to be interesting to watch to see what happens, right?
That's it. So productivity has to be the key because a 1%. So the OBR released a report earlier this year. There was a huge fuss about this report. They release it about once every 6 months, and it looks at the 50-year future of the economy.
Yeah.
And this year, when it came out, there was a big, huge furore, mostly because our bond market yield curve is shaped in a fairly negative way at the moment. And productivity, they said in that report, if we increased our productivity just by 1%, right, over the 50-year period, then we would be down to about 35% of debt to GDP. Right,
but
so that's how 1%. Now,
that
wouldn't really happen because if we did increase it and we had more money, politicians would want to spend that money now, which is the nature of politics, unfortunately.
But is it
1%,
easy to increase it by 1%?
Well, it hasn't been easy for us since 2007. It's been very challenging, but other places in the world do achieve
How
more
are they
productivity.
doing it?
Well,
infrastructure projects, all
we
of that
had a
stuff?
little chat and some of this about, absolutely. And one of the things, again, Rachel Reeves probably deserves a bit of credit for, is they have put money into long-term infrastructure projects that will not benefit them in this parliament.
Yeah.
And they should be celebrated
And that's
for that.
incredible,
That's
to be
proper,
fair. We've
that is
got
proper
to
politics.
admire them for what they're doing.
We cannot compete with
right.
the Chinese Communist Party or whatever, who can take a 50-year view, which is part of the problem. But do you want an autocracy? And that's a big conversation.
It's a bigger
Look
debate,
at
right?
how Donald Trump runs things. He tries to run over the rule of law. This country is built on the rule of law.
Yeah.
We have, in my opinion, a better rule of law than the United States.
But would you not say that
this is one of the reasons why people come here?
Yeah, but also, would you not say that this is the time now in our politics for someone like, I'm not saying Donald Trump, I'm just saying a person who can stand out and not worry about what happens in the next election, but actually do the right thing by the economy. For example, the welfare bill we've talked about, which is, I don't know how many millions and trillions it is, but it's huge.
Yes.
You mentioned earlier the PIP. What was the thing you mentioned? The 4.
Yeah, so if you're on all 4 levels of personal independence payment that you can get, you earn £4,000 a year more than someone who is working full time on minimum wage. And that can't be right.
And is it easy to become, to get these 4 different allowances?
Well, there are a million people that have done it. And if you know anything about systems and humans and incentives, I think it's Charlie Munger who used to say, you show me the incentive and I'll show you the outcome. So what happens is when someone works out how to get through the system, the 1980s bad, I don't want to take too much of an aggressive view against this. There's lots of people receiving PIP who need to receive PIP.
Of course.
I know people who need to be receiving
and no one's
it.
saying that, right? Nobody's saying everybody, it's the people who are on purpose scamming the system, and they're out there.
As soon as you build a system, people know how to get around a system. It takes a bit of time, and then water runs downhill. And I tell you, because you're my friend, and then you know how to do that. And if you decide...
And word of mouth spreads the fastest, right? It's like a wildfire.
I haven't got to go to work. And you see it on occasionally. There's various influencers on TikTok and whatever else who are telling them how many... We had someone apply... Now, don't you tell me, take a view on this. We had someone apply for a property the other day, and the property coordinator in my office said to me, right, they're on 60 grand a year, they're foster carers, and they're on or DLA, PIP, all those levels of everything. So they earn £5,000 a month. So vastly more than they needed to rent the property that they were talking about.
That's not earning though, is it?
Well, the foster carers.
Oh, foster carers, yes. You earn money.
Foster carers do get tax breaks for being foster carers.
Right.
So there's certainly on one side of that, which I massively support. And apart from anything else, as an economist by heart, if children didn't have foster care and they were all looked after in children's homes, then the cost of that is absolutely eye-watering, as you'll know. You know, it can be £10,000 a week and things like that. So from the economy's perspective, from the children's perspective, from a moral perspective, I love what foster carers do. From the other side of the fence, when they're getting an extra 25,000 quid in benefits a year, on top of that, I think, do they need that at that point? If the system somehow allows that to happen. And I've seen and I've been sent screenshots of people where people are claiming £75,000, £80,000 a year, pretty much worth of benefits between a family that want to rent a property. And you just think that is, you know, pretty. And I'm not talking about London there. I'm talking about Liverpool. Or the Midlands.
How much did you say? 50?
75 grand.
For a family of four, let's say.
Well, or multi-generational family, perhaps, things like that. But still, they've found a way. However the nuance of the details.
And this is all on the tax man.
So remember, show me the incentive and I'll show you the outcome, right? So you have to think that way. And as I understand some of the nuances of the argument, a lot of the pushback was about the wrong sort of cuts. But if you look at what Starmer did when Rayner had her little dalliance with stamp duty and didn't pay like the rest of us do. They had a reshuffle and they brought Pat McFadden in as the minister for the DWP,
minister,
for work and pensions. And he's known as a bit of an attack dog style character. So clearly they are still going to push these welfare cuts through. Now, politically,
that's good though.
100% good.
But is it just 5 billion?
Well, it was 5 or 6 billion, but that's obviously part of the 5 or 6 billion that's come back in this budget that they now need to find in this black hole. Is that been addressed on November the 26th? I don't know. I don't know if it is or not. But I do know, if it was me, 70% of my focus would be going into productivity.
So that's, going back to the Chancellor of Exchequer.
Our 3, right?
So productivity.
Absolutely. Second one is health, right? Because apart from anything else, demographics-wise, in terms of if we were a fair bit healthier than we are, again, according to the OBR's figures, then GDP would grow massively because it takes people out of the sick list of things. So look, I think we should be honest. A minority of people are gaming the system, and the majority of people in the system need it and they deserve it. And most people, you know, tenants, landlords alike, whatever, they get their nut down and they get on with stuff, right? And that is the vast majority of society. But if they are less healthy than they otherwise should be, partially because I think there's a lot these days. Bad
lifestyle, food habits, alcohol,
so
whatever.
If you obviously make your own choices on what you spend whatever income you have on. But if you buy cheap food, if you're not well educated about things like that, if you can't control your cravings, if your metabolism is as good as someone else's, you know, Manjaro is going to change a lot of this over.
It is
changing it because it suppresses inhibitors in your head as well as doing things to your body, right? And it really does look like a bit of a miracle drug. But still, everything out there. What's cheap? You know, they banned 2-for-1 offers in supermarkets on. That's quite a good thing to do because it's stopping people from buying 2 packets of sweets instead of 1. Yeah. But still, when you walk into the supermarket, the first thing that's in front of you is big bins of sweets, right? It's just sugar. Yeah. It's never going to be nutritionally good, but it's cheaper and it shuts the kids up and it gets them wanting more. Yeah. And that challenge was not there in the same way when I grew up.
50s,
when you grew
well,
up.
60s and 70s, it wasn't there.
There was a bit of chewing gum by the till in Sainsbury's.
Yeah.
I remember
and it was
when
a
we
treat
used to go
as well.
in there.
And I think it
was a treat. Yeah,
how we were brought up was very different to how we either brought up our kids or even
you
other
can buy a
parents.
packet of biscuits, 4-pack of biscuits in Aldi for less than £1 in today's world, where £1 doesn't buy anything. Yeah, and they're the worst things nutritionally people could be eating. Yeah. So personally, on a more detailed level, I would change the tax around food and the way that food works, because this is why government exists, right? To be sensibly guiding the hand. Yeah. If the companies won't do it themselves,
they will
tax them and take that revenue and spend it on Mount
On
Jaro
health.
or whatever you need to spend
to
it
give
on
to the people who need
in order
it, right?
to make in order to make
That's
the
a very
food.
good point you make, and no one's addressing this point because this is the.
And I don't know why. I don't know why. The
this is the-
sugar tax, which obviously was brought in by the Tories, which is an unusual.
And even things like fried chicken, for example. Every second shop on the high street is fried chicken.
Yeah.
And we know chicken itself on its own is fine, but fried chicken,
100%.
you know?
100% correct. So, I'm a big fat tax towards, economists call it externalities. If it creates lots of bad health, diabetes, etc., tax accordingly, put money into it and make the decisions on a sensible economic basis. So
that's the second bit.
If you want to bring healthy food down, use the tax you put on sugary bad foods to subsidise the cost of healthy foods. Why not?
Yeah.
Why not
Good
do
protein, vegetables, fruits, whatever else.
Exactly, because that's a lot of people moan about that. Well, it's so expensive to do that and things like that. But the thing is,
It's not.
It's not. You
A
can buy a bag
butternut
of frozen
squash.
vegetables for 80p.
And a butternut squash
A
costs less than
kilo's worth.
£2, which is probably 2 meals for 2 people.
Yeah.
If you learn some cooking skills, right?
Absolutely. And I understand prep time and lifestyle, but these are all choices.
But look,
ultimately,
we
aren't
make
they?
those choices. We are working all the and I make those choices deliberately every single day to cook fresh food.
Sure. And there's lots of convenience services you can use these days that are accessible to people.
Yeah,
that
those
can
ready
people
prep-
use, HelloFresh and
Whatever those-
other brands are available, right?
Absolutely.
But that's your 20% realistically, and it needs to be addressed because as people get older, 65 is about the tipping point at which they start costing the NHS more and more and more.
Yeah.
And in their 80s and 90s, they start costing absolute fortunes.
Yeah.
Now, I'm not saying get rid of the old people,
No,
right?
of
We
course
can't do
not.
that.
Absolutely.
So, but we can definitely help in. What you
And
want
it's
to
a
do is give people more quality
What about the
years
quality of life as well, right? It's
Absolutely.
not just, it's no point like, people often say, I'm here for a good time, not a long time necessarily, because you're living longer, but not necessarily the best years of your life, if you know what I mean.
Yeah.
And if you have the quality of life, it makes life so much better.
Well, it's like things like smoking, you see. One of the things that really disappointed me about Sunak was when he brought in the law about banning people from buying cigarettes. If they wanted to buy cigarettes, let them buy cigarettes, right? I'm a libertarian at heart like that. But just keep taxing them like you are.
Yeah.
Make them pay. And yes, sure, make them stop smoking over other people. Absolutely, that's just disgraceful. But also tax vapes, right, properly and raise revenue.
They love taxing, as you said, income tax, whatever it is. But why can't you just tax where it's actually needed?
Proper consumption tax
And
on
bus-
things
like,
that have
yeah.
externalities. That's the heart of economics in many ways around it. So that's the first two.
Productivity, food.
And only then do we move on to climate change, right? And the whole way that this government addresses net zero, and in fact the way that the last government addressed net zero as it goes, was completely wrong. They're complete idiots in what they spend the money doing, because what's needed at the moment still is more R&D money.
Yeah.
At least they are talking about things like small modular nuclear, which is going to be huge. But what's the real world? The real world is the private sector is already stepping in, and Microsoft are pumping big money into this. Why? Because data centers need so much power, they can't rely on the national grid.
No.
So they're going to micro-generate via small modular nuclear and things like that. And the private sector, there's so many exciting things being done in geothermal. And these are the answers to the problems. And I'm not saying solar and wind are not an answer, but you need huge battery storage. It's intermittent. There are issues with it, but it's still
But
also...
is that what the Labour is doing, is solar and wind?
And also the arbitrary 2030 target is just making people poorer. And the amount of the people, and this is why in this budget, in my opinion, they're going to cut the 5% domestic rate of VAT to zero on energy. It will be something they can give back. But a mockery will be made of it. I can tell you the headlines now, Labour Party communications, if you're listening, right? Because energy prices are up 8% in the last 12 months. So knocking off 5% is only going to last 6 months.
Yeah.
And then it's going to be the same problem that
So
it
hang
already
on,
was.
so you're saying when we pay for our electricity and gas bills, we are paying a 5%?
We pay 5%.
We don't even know
yeah,
this.
yeah, yeah.
If it's in
and
the
what
bill.
they should do is get rid of the levies that are on there, which are completely incorrect.
But levies are the tax by the government, which this is revenue for them, though, right?
Absolutely. It is revenue for them, and it's pumped back into... But if you imagine, if you are 30% of the where you need to be in terms of R&D, and then you start pumping money in at 30% point, rather than pumping money in at the 80 or 90% point, where you're going to get 10 times as much for your money, we're going to turn around in 10 years' time and go, cool, all that 300 billion that we've spent on that, we could do that today for 60 billion. Because that's the way new tech works.
Yes.
Right? I went to buy a computer monitor the other day. I haven't bought one for a while, expecting to spend about 100 quid. Got a 24-inch monitor for 50 quid. I thought that's half the price the last time I bought one.
Yeah.
Because that's progress.
Technology
right?
gets cheaper.
And it's a better monitor as well. So that is how tech works. That's how tech's always worked. That's how mobile phones work. That's how, all the rest of that. So you've got to invest more in the R&D side, and you've got to stop. It's got to stop being so political. And it's still important, but it is the 1% in productivity would pay for all the climate change that you wanted to do, which is why the whole thing is completely wonky. So that's what I'd do. I'd get rid of the triple lock on pensions. This is why I'd be dead unpopular, because it's not sustainable.
And
so
the triple lock is when you say index linked?
Index linked, so CPI effectively, 2.5%. And wage increases. And that one's the biggest joke of them all, realistically, because I'm not being rude, but pensioners aren't working.
Yeah.
Now, if they want to draw their pension and still work, that's great. It's up to them. Hopefully, they've put themselves in a position where they don't need to, but they might still do it because they want to. And there's such a huge amount of knowledge in the population that's over 65.
Yeah.
You know, it's not just in the medical side of things, but in everything that they've done.
In every industry.
And as AI becomes, it's the young that have got a real problem, because partially this is to do with the constant pushing up of the minimum wage, because now you can find people at jobs you're advertising at maybe 5, 6, 7 grand above the minimum wage, and you can get really experienced, really good. But well, why are you going to get someone in there? I'm really proud at the moment. We've got an apprentice in our office. He's enthusiastic. He's doing well. He's making all the right noises. Still, they'd say the government subsidises things and things like that. Not by that much with the way wages are these days. But I hope that he'll stay when he's completed his apprenticeship. But he's a real breath of fresh air.
Yeah.
And we're not a massive organisation.
Yes.
I'm very proud that we can do that. And I want us to do that in the other businesses that we've got where we can, as long as we get what we give, sort of thing. But if you consider then someone who's just started out or maybe done university, hasn't quite fallen into the job that they want, whatever, are you going to bring them in and spend many years training them? Or are you going to get their equivalent who's maybe 45, 50, whatever, who's got all that experience already, and it's the same money? Because when you smash the minimum wage up the minimum wage is now in the market. When it was introduced, by the Labour government in 1997, I think it was £2.50 or something like that.
£14.
And it hardly changed anything, because if I set a minimum for a price, if I say milk's got to be 50p a litre, well, if the market says it's £1 a litre, it doesn't have any impact. If I say it's got to be £1.50 a litre, it has an impact on the price, and you are distorting. And the more you play with the market, the more you need to be right about it, which is why I support things like sugar taxes on food, but don't support a lot of things that are being done around the climate change point of thing, because they are not doing the right things.
Well, I get that. But also there's other couple of things I wanted to talk about. I know that property in the UK...
Did I get the job as the Chancellor before we move on?
100%. The 1% productivity, I was sold at that.
No problem.
But the other thing I was going to talk about is regulation. Now,
yes.
I know that you mentioned in many podcasts, going back to property again, and I know right now a lot of small landlords like myself, small portfolio, whatever, are thinking, well, what do we do? We've got this small residential portfolio. It's definitely not a seller's market. So either you sell short and you take the hit.
Agreed.
CGT and all of that as well.
Agreed.
Or what do? You carry on as being residential landlords. You've got Renters' Rights Bill, which is now
I think
law.
You've got a lot of people in that second category who I define it as they wouldn't get in today, but they're in and they've got to stay in for the moment because there's no way out.
No, there's no way out. So what do you say for someone like myself who's kind of very nervous about Renters' Rights Bill? More or less, we've got great tenants, but you never know when these new, like you said, what was the line you used? When you show them the way you...
Are you talking about incentives and things like that? And so you show me the incentive, I'll show you the outcome.
It's like tenants, right?
If there's suddenly lots of, firms set up for claims for this, that and the other, it could drive bad behaviour.
Rent repayment orders, and they're actually pushing it in that way.
Yeah.
Then
Yeah.
good tenants could start thinking differently, right?
They could. I mean, most people are pretty sensible, aren't they? And there's what I would say to calm your nerves and any other people who are nervous. I've operated properties in Scotland, over 100 properties in Scotland for over 5 years.
Yeah.
In 2017, they changed the law and got rid of their Section 33, which was our Section 21.
Right.
So I realise the abolition of Section 21 is not the only part of the Renters' Rights Act as it now is, right? But it's been a big worry for people.
Yes.
I can tell you that in the real world, it operates absolutely no differently in Scotland than it does in England. Absolutely no differently whatsoever. The one thing that Scotland have got right is that they use a tribunal system with a tenant sympathetic representative, so it might be CAB or someone like that, and a landlord sympathetic representative, so it might be from the Scottish Landlords Association or something like that, and they have a fair hearing.
Yeah.
But this is part of the frustration of the whole thing. The data is wrong. The data says 25,000 Section 21s were issued. So all of those were no-fault evictions. No. That's what was issued because it was the least line of resistance.
Yeah.
In those cases, 20,000 plus of them, there may well have been fault.
Yeah.
And 19,999 of those might have been rent arrears.
Yeah.
And unless you know the data to that level,
Yeah.
and I'm not saying that is the percentage, but it could be something like that. Unless you know the data to that level, you can't act on the data. But what we've done is we've acted on the data. And bear in mind, we've got a government who've said, let's find money by cutting regulation. Right, and they've cut regulation in the mortgage sector for first-time buyers who can now borrow more money, which will help to feed the organic growth of the market going forward. But the market is still reeling from a world where we did get, well, if you were very lucky, under 1% mortgages on a residential house.
Yes.
And now the best you're going to do today is sort of 3 3/4,
4,
right? 4. So there's still that's a long-term amplitude wave that shocks things.
So that's the one thing that the Labour government have done well for the property market.
I think so. I think you could say that.
Change the calculation of the affordability.
All they've said is your stress tests, lenders, don't need to be as draconian and as harsh as... You're stress testing people at 8 or 9%. Why? The law doesn't even say to do that. No. You can stress test them much lower.
4,
and all
5%.
the lenders went, oh, right, okay, yes, you're right, we can. So started stress testing at 6% or 6.5%, or 1%
6%
over
interest rate. Oh, yeah.
1% over the rate at the end of the term forecasted by the markets is your base level. So if in 5 years' time you'd expect the gilt yield to be 4, you could argue 5% stress test is okay.
Yeah.
Most lenders are pretty cautious, so 6% might be fairer. But 8 or 9 seems ridiculous. It would take quite a world for us to get to an 8 or 9% interest rate.
Yeah, absolutely.
So there is no point doing that, and that's enabled the average first-time buyer to borrow,
which is great, right? And
£28,000 more. Well, if you want to get people onto the ladder, and actually at the moment, going back to your point about landlords who might be a bit nervy, you might be selling to first-time buyers. That might be. I sold one the other day to a tenant. I love nothing more than selling a house to a tenant. A, really good outcome for them, good outcome for us, right? B, no void, no this, no that, no the other. C, when you've agreed the deal, the tenant takes so much care of the house and all the rest of it. They're the most amazing tenant in the world. Everything is right about that for me, for my business, right? Absolutely. I know some people don't necessarily want to sell, and I wouldn't force people to sell.
But if it's at the right price.
If it's the right price and you can give them a 5% discount. I would have lost more than 5% by going to market, paying an agent. Yeah. Being void,
asking him or her to leave,
all of that,
2 months of voids.
If I want the 180-day sale price, I've got to wait 180 days for it. So it's probably 6 months of voids. Yeah. But it's probably less than 2 months to do the deal. Yeah. But the deal's got to get over the line to a retail buyer. Yeah. So actually, it's just more efficient, and I love efficiency. So it makes me feel really good, stuff like that. So that is one way. And this pertains back to why is there so much stock on the market at the moment, which makes it harder to sell. Because lots of landlords are trying to sell. Yeah. And we don't trust all of this data at a governmental level. I don't know why I said we, because I'm not in the government and I never will be. But the public, I suppose, don't trust all of this data. They trust the English Housing Survey, which comes out about 9 months in arrears. We're due the one that will be up till the end of March this year will come out. I think it'll reveal there's fewer units in the private rental sector, but not a ridiculous amount fewer. And people will go, okay. And it will only be in about 3 years' time when we see cool, in 2024, 25, we really did sell quite a few units
Yeah.
in the PRS.
And now
there's fewer
Why
rentals.
is rentals so high? Why is the supply of rental stock diminished?
5% stamp stops people wanting to get in or stops people being able to get in.
Yeah.
I mean, 5% stamp hurts me, right?
Yeah.
And
And
other
you're
people.
not even at the highest level of buying.
But I can't avoid 5% stamp if I'm going to hold units. It's
Yeah.
not, well, I can. Obviously, I could be a tax avoider, but I'm not. But, from a commercial perspective, there's no way around that. So I do fewer deals at 5% than at 3%.
Yeah.
And most people on the left would say, good, I want you to do fewer deals. But then if I say, well, who's fixing up the houses with nobody in? Who's fixing up the long-term empties? Who's fixing up this knackered auction property? Who's buying this tenancy property at auction where it's not compliant and this is a problem and that's a problem,
Yeah.
that's a problem? And you'll fix those problems. I fix those problems.
Yeah.
I'm not pitching for a knighthood, right?
We're risk
But-
takers, right?
Yeah, exactly.
Businesses are risk takers by the very nature of it.
I'll mop that up and it'll be left with a better outcome for all people involved, with me in charge of it than someone else in charge of it.
And it's funny, because in spite of everything the government is throwing at us, right?
Hmm.
Regulation, taxes, whatever else is, the macro level that you talk about every week, listings at 30, 35,000 a week.
Yeah.
Obviously, there's reductions and all of that you mentioned.
Yeah. 100,000 price reductions a month.
Wow. I mean, what is there
Across
not
the
to
country.
like?
Exactly.
As an investor, you'd be
Don't
like,
tell me you can't buy a deal, right? If you're looking to buy a deal.
Yeah, exactly. But I think you're right. People are too nervous. People are scared of the whole regulation and everything else. And that's what's, I think
Yeah. I think be calm about that, because in the system, I don't believe will operate terribly. There will be, just like there are today, just put into context, there are still somewhere between 5.4-ish million rental markets in the UK, right? 5.4 million.
rental houses, yeah?
Yeah. So if we read one bad story a day,
Yeah.
that's one bad one in 5.4 million. Right?
Wow.
So it's nothing.
In
It's nothing.
context, absolutely nothing.
And that is why you have to be careful with media, because it can scare you with this, that. If you look at a lot of the people landlords who've been prosecuted, there are bad examples where the councils have been heavy-handed, don't get me wrong. But a lot of the times they have really, really taken the mick for many, many years.
And they have those lands. There are those landlords.
100%.
100%.
Just like there are tenants that go around never paying a lick of rent. I get the occasional one where someone refers someone to me who's like, I've had this tenant in and they've been in 11 months and they haven't paid any money.
Yeah.
And I haven't been, and inevitably it's a really expensive property, because these people know how to get themselves into the penthouse flats and this and that, and they can talk well. And I'm afraid it's probably a professional. I would get a Paul Champliner or someone like that, get on the phone to Paul and get him to sort it out.
But
because this is not going to sort itself out.
But can I just say, Adam, exactly what you've just said, and that's what I think landlords should be doing, is focusing on making their systems robust. How the hell did they even in the first place take this tenant on, right? Their paperwork is not right. Their systems are not right.
That's
so
right.
I think rather than worrying about we're in this for like the next 3 or 5 years, whatever it is, right?
Yeah.
Focus on getting your systems robust, getting yourself compliant,
100%.
creating those better relationships with your tenants, and in the most we have that good relationship, and they know who you are as a person. Not be a friend or something, but at least they know. In the know, you try and fix problems as soon as you can. Maintenance wise, you're on top of things. This is all we can do as good landlords.
In the bright side, if they're public sector workers or private sector workers, if they're renters, which normally the number one way to tell if someone's going to be a renter is that they're younger.
Yeah.
Right. And the number one way to tell if they're going to be a landlord is that they're older.
Yeah.
Average tenant is in the late 20s, average landlord's in their mid 50s.
Yeah.
Right. So it's just it's an age thing. And that upsets people, but that's just the truth. And you'd probably rather be in your mid 20s and a tenant than in your mid 50s and a landlord, because the one thing you can't buy is time.
Yeah, absolutely.
Right. But when it all evens out in the end, ultimately, but the pushing up of the minimum wage that I talked about, the pushing up of overall wages in the public and the private sector, means that affordability is better for tenants.
Yeah.
Right. And now that the rent increases have calmed down, because we had a late, like you always have a lag effect when there's a huge amount of inflation.
Yeah.
In 2022, inflation was very bad, but rent inflation wasn't anywhere near
Yeah.
what food inflation was. But it's come 2023, 2024, and it's had to come because this is how markets work.
Yeah.
Because as the interest rate has jammed itself upwards, rent has not increased as much as the average interest rate has. By any stretch of the imagination, you were paying under 3%, now you're paying 5.5%, 100% more.
Yeah.
It's 100% more. Rent's up 20% in that time. That sounds very bad, but not in the context of cost base being up 100.
No, absolutely. So we are where we are right now, and
Yeah.
with this big massive portfolio you've got, what is your vision for your own sort of business? We know there's a lot of negativity right now with the residential.
So it's a great time
landlords.
to be buying, right? That's what it
So you're
boils
still
down
buying?
to. We did an incredible amount of volume before the last budget because I'd honestly never seen anything like it. Many people were so negative. We felt like we were the only buyers out there. And we were buying so much stuff so cheaply. So we're currently still going through a cycle of refinancing some of that, optimizing some of that, selling a bit of that on.
Yeah.
Because in 2 months we did more than we bought over 100 units in 2019.
Wow.
Right. In September and October 2024, we bought over 100 units. Wow. So in what was a really good year pre-COVID, we surpassed that in 2 months. Wow. And we're not a massive operation, so we probably went a bit far in terms of the operational capacity that we have, but we've managed to do what we need to do and get some help in and do some bits and bobs, as you can imagine. But we're still working through some of that. So still buying today, absolutely. And it just depends what the deal looks like.
And your stock is what, just two up, two downs, three
My
beds,
dream
four
stock
beds?
is 3-bed semis, but they don't stack up at the moment necessarily with where the rents are versus where the interest rates are.
Single lets all day long.
Single lets / social housing leased to a housing provider.
Right.
And that has become better and better simply because regulation has changed against you. It's become comparatively better is what I mean, but also because
and let and forget kind of thing, right?
And the disconnection of the LHA rate from rent negotiations on social properties that's what Angela Rayner didn't understand. Freeze LHA. It's a terrible idea. All the papers were the one thing, if someone from Shelter was here, could get on the same page as is that LHA should not be frozen.
Yeah.
Because it's bad outcomes for everybody.
Yes.
And it doesn't save any money.
Is it still frozen?
Yes. And it still goes on the temporary accommodation bill. And I dare say it will be frozen for 2026. And it's a terrible decision, but it doesn't even affect us as people who might provide properties for registered providers, for social landlords, because they're now having to negotiate at market value. So instead of being at the 30th percentile, which is how LHA works and has done since 2014, we're at about the 85th percentile on the social lets that we're doing at the moment.
When you say, what does that mean?
So the valuation office gather 100 to 1,000 rents in an area, in a broad area, of 1 beds, 2 beds, 3 beds, 4 beds, shared rooms. And then they line them all up. So the cheapest is £100, the most expensive is 10 grand.
Yeah.
And they take the 30% along.
Right.
That's how they set the LHA rate. But they've disconnected that. They've frozen the LHA rate. So when I've done the research and looked at what we're getting on our new social lets, we're hitting the 85th
So that's only if you go into the local housing, to go to the council to let it out. But you're not going to the council, you're going to
and those conversations aren't even based around the local housing allowance anymore. Because it's so disconnected. The provider is going to the council and saying, this is the number that we need. Because otherwise we can't get the property.
So it's although it's frozen in paper, they're having to budge on and pay.
It's a complete nonsense. Yeah.
So you do. So
discretionary payments, and the system is complex. But there are discretionary payments. There are all sorts of other ways for them to get around the exempt rents. Not that they necessarily apply to a lot of the stuff that we do.
That's the thing. I don't know what is this. They're in love with this whole regulation, setting targets, setting. This is all what's killing the whole UK PLC market. In every sector, doesn't matter what it is, right?
Well, urban development is dead. Urban development is completely dead. There are 280,000 permissions in London that are unbuilt, and 90% of those are over 18 metres, and they're dead because of the Building Safety Act and the Fire Safety Act.
Is this the Building Safety Act was because of
Michael
Grenfell?
Gove, and so was the Fire Safety Act. But this is Michael Gove's brainchild. But the trouble is, government don't understand. And then they don't listen when the developers are telling them because they think, well, the developers are always going to say
greedy developers, the usual.
But guys, they've stopped building urban stuff. And if you want housing in London, which presumably you do, right? And that's where a lot of this, Sadiq Khan's target, 84,000 a year, and he's going to be doing about 6,000 a year or something by the time we get to next year. So
not even 10%.
6% of his target or something like that. That's where the starts are going to be. That's how bad it is. But they might realise this. They might change the legislation in 12, 18 months' time. But it's like more data, because they don't trust Granger when they say something, even though they should listen
to the
and not be so sceptical. But just look at the data. If you don't listen to them, look at the data.
But what about the people who are actually holding on to these medium-stroke big developments in London? 280 units or 280 planning permissions?
280,000 planning permission units that have been granted permission.
Oh, but how are they even imagine if they had debt on it?
Well, I mean, London market does work a bit differently, doesn't it? And a lot of those will be unencumbered.
Oh, fair enough. But even then,
urban land is down more than 10% since 2022. The value of urban land. And people think land doesn't go down in value. Urban land has done because people can't build stuff. So construction inflation has taken a huge bite out of the cake. If you remember the old a third to buy the plot, a third to build it, and a third profit, right? There's only so many ways that obviously that's an old adage.
Yes.
But if construction goes up in price by 17% and end values go down in price, which is what happens in 2022 in London, what do you think happens to the value of land? Or nothing gets built because there's a trade-off. And a lot of land sellers are not always that motivated. They usually do own it. And they're much less likely to have encumbrance.
Yes.
It's harder to get. We don't have land with 75% LTV because there's no way of servicing it.
Yes.
It's more speculative, isn't it? Or strategic land is something that bigger land bankers do. When you think strat land, you think people who've got 9-figure land banks, 10-figure land banks. That's the normal way.
So you've already become the exchequer, yeah? Right? You've already done your work. Now let's imagine if you were having to do, I don't know which department is in charge of all this regulation, but if you were to become
housing,
charge of, the housing department.
Well, MHCLG technically, yeah.
I don't even know who the housing minister is right now. I've lost track.
Well, Matthew Pennycook is still in post.
Of course,
although Angela Rayner changed over because she was the Secretary of State. But it's Steve Reed, isn't it? But Steve Reed is still going around saying we'll build 1.5 million homes, and all the figures show you're not going to be able to beat 850,000 because it takes time.
Yeah, it takes
build
time. It's
homes.
not like you said. It's always not just the planning; it's the whole macro environment.
It's viability, and the ultimate problem at the moment is in the bits of the country where it's viable, as in you've got a nice end value, people can't afford to buy it.
Yeah.
And in the parts of the country where people can afford to buy it, it's not viable to build it
because the construction costs are higher than the actual
the margins
end
are
value
ruined.
costs.
And when you do use leverage, because obviously developers do use leverage, it's more expensive leverage.
Yeah.
And then with a slow sales market, developers, house builders work on how many sales are they doing per week.
Yeah.
That's their metric. And it used to be a sale a week on a site was the yardstick, and it's decayed down to about 0.8 odd over the years.
Yeah.
But they're at like 0.6. And if they're at 0.6, it's then, well, how do we do the next site?
We're going to build slower and slower.
0.6 is 25% slower than 0.8. So instead of taking 12 months to sell a site, it takes 18.
Yeah.
And then your margin is lower and your capital's been in for longer. And your investors, if they're equity investors, don't get paid so much. Yeah. And everyone's got a problem. And there is, significant speculation there'll be a Help to Buy initiative reintroduced of sorts. It will be called Buy to Help or
some
Tesco Buy or whatever it is,
buy.
But it'll be a very similar sort of scheme because the big developers are screaming out for it to try and inflate the price of new build stock because they're saying, in 2023, new build stock still sold at a higher price than 2022.
Yeah.
The whole of the rest of the market in 2023 went down. And I said at the time, this is not a sustainable situation because you can't keep going up if the rest of the market is not playing ball. Right. And there was a disconnect of about 5% between those two prices. And I said, they'll pay for this at some point. And well done. They're very good at selling houses.
Yeah.
But they can do incentives. They can do this. They can do that. They can do all these other hidden things. In the 2010s, they were making 30% margins. Now, we dream of 30% margins as buy-to-letters, right? But 30% were nearly the old third. They were achieving that as a PLC.
Yeah.
Right. They're achieving like 17 today. So the margins are in half.
Yeah.
And these are people where capital comes from incredibly liquid markets that can go somewhere else and get a better return. So it does. So
your magic wand would be the building.
You've got to repeal the Building Safety Act.
Yeah.
You don't need a second staircase in a building at A. They did a viability assessment, a model. How many lives would it save by having a second staircase in a building between 18 and 50 metres?
Yeah.
And I think it was 70 years, a 70-year period. How many extra lives would be saved?
How many?
0.
What is the point
Not
of this?
even one.
What is the point of this regulation even? What is the point of it?
Because politically, Grenfell happened and Michael Gove's a very intelligent guy, but he's not a property guy. And the problem with very intelligent people is they think they can do everything. And when they're outside of their lane, what they really should do is listen to experts in their field. They didn't listen. Grenfell was a horrific thing that happened. Nothing similar has happened since, even though Recladding buildings has taken way too long. EWS ones have ruined people's lives. There's lots and lots of examples of that out there in the press. Can't sell this flat, can't do this, can't do that.
Yeah.
People have lost fortunes on that stuff, not just in London where the market hasn't done very well, but in Manchester where the market's done really well.
Yeah.
There's still been buildings with cladding that's not, suddenly you don't know what's dangerous and what's not, So not getting on with it is a problem, definitely, but it just didn't realise what it would do to developers. And the gateway system is still not even established enough for people to know how hard it is to get through Gateway 3 to build high-risk buildings. And you see these things and think, well, in Germany, in France, in Holland, they don't do the second staircase until 50 metres. These countries are cautious countries with significant amount. We would normally say, in theory, Brexit meant we could be less cautious on our regulations.
Yeah.
If we believed, as free marketeers, that would help with growth. And instead, we've gone the other way on building.
But that's
high
the
buildings.
thing. So again, we haven't even talked about the B word, but we all know that Brexit's been just squandered away, right? We've not really, the basis of Brexit was, as you said,
like the Labour government, really, what could we say about them? They came in with no real plan.
Yeah.
They were caught short by the election being sick. Everybody was sat there and thought they'll definitely go as long as they can, and it didn't happen like that way. And they weren't ready when the election happened. But Boris had no plan really to speak of. He's not a plan guy. Liz Truss speaks for herself. Could Sunak have sorted something out if he had more time and he hadn't come in a problematic situation?
Probably.
Yeah, probably. But he was too late, too little, too late by the end of the way that Parliament had played out.
So if you had to run the budget in a couple of weeks from now, what is it? What would you do? Like, would you be bold enough to do?
100. I'd be extremely bold. There is an issue with council tax in that the trope is it's as much for a 3-bed semi in Blackpool as it is for Buckingham Palace or whatever.
Is it? Is it that similar?
Council tax is a seriously regressive tax if you look at the percentage that people pay. And I say this as someone who lives in a Band H house, quite proudly, thank you, that I built myself. And I'm screwing myself over by saying this. But the council tax system is wrong and needs re-evaluating. And I don't know why Labour don't do it. It would be complex, and they might say do it in 12 months' time because everybody makes this huge... This is, again, the example of people not knowing how the system works.
Yeah.
You've now got automated valuation models and AI. In 12 months' time, we'll be able to tell you what every house in the country is worth within a reasonable amount.
Yes.
And then there will be, it won't be what it's worth because you haven't changed your kitchen for 50 years.
Yeah.
It will be what it's worth on that bit of land that it's on, a house of that type. So revaluations will be a piece of cake if you wanted to do them. So that should be done, but you're only talking about a couple of 2-3 billion quid there maybe. And probably you might want to, because it's been so regressive, give a little bit back to people who don't live in such illustrious properties and take a little bit away. And that is how tax works. The more money we've got, the more we spend, the more VAT we pay. Yeah. Right? It's how tax always works. But Jeremy Hunt slipped a poison pill in 2024 in March when he did what became his last budget by putting income tax down by 2%. He didn't. He put national insurance down by 2%, and it was badged as this wonderful thing. But national insurance, 8% employees, income tax, 20%, 28% total rate, right? The rate between 2000 and 2023, early 24, was between 34 and 31%. How could we go to 28 when we just had a pandemic and we spent the thick end of £500 billion
So he reduced
on that
to 28%.
But he did it because he knew he was going to ruin the party for Labour. He knew that he would. And also, from an ideological perspective, Jeremy Hunt believes lower income tax, you might take more money. Yeah. But in reality, if you're on PAYE and you earn under 50 grand, you're stuck in the trap and you take what you're given. Yeah. Now, it does change the incentive. Show me the incentive, show me the outcome. If benefits are outweighing things because tax starts to drag on you even more. But like I said, at the lower end of the pay scale, people's wages have been pushed up. Yeah. And that is a good thing. And it's a good thing for the economy because as you push them up, then ultimately they spend more. They spend all of their marginal income that they get. There's VAT on it. Remember C plus I plus G plus X, 70% is C. Yeah. Increased consumption, increased growth, right? It's a virtuous circle. If you earn more money and you go from earning 300 grand to 330 grand, you probably don't even spend any more money. It doesn't make a lot of difference to you. You might have an extra holiday. That'd be about it, maybe. But you probably save quite a lot of it, which doesn't go in. So we need to disincentivise saving a little bit. This is quite controversial. Yeah. But I would change the ISA allowance and things like that. I would want people to be trying to spend it. Yeah. People say, well, it's the wrong thing to do because it doesn't incentivise people to save. People who are saving 20 grand a year cash into their ISAs are not going to be reliant on the state when they're older.
Yeah.
Right. It's not going to happen. They're not. They are the haves.
They're not the type of
who are in
people.
exactly. The bottom 50% of the population don't benefit from ISAs.
Yeah.
So if they don't benefit, why let the top 50% benefit? Right. That needs to be changed. But income tax needs to go up. I would personally scrap employees' national insurance. I think it's a horrific tax, and I would put it all on income tax. So I would put income tax up 0.5% a year for the next 4 years.
Yeah.
So little that you wouldn't even notice it.
Yeah.
But that would all. I'm playing within the rules of the game,
Yes.
right? With the OBR, look 5 years in advance.
Right.
I'd say that 2% is going back on because Jeremy did that to us and he shouldn't have done it, the naughty boy.
So bring it back
well
to
done,
what
Jeremy,
it
but
was.
it's coming back slowly. But by bringing employees' national insurance out, taking that out of the equation and putting it all on income tax, then anybody who pays any income tax whatsoever has to pay the 28.5% rate that I'd be setting at the basic level. So that would include pensioners,
Yeah.
that would include landlords, that would include all that sort of stuff, right? But ultimately, it would be much fairer. And you could stop messing around with class 2 and class 4 national insurance contributions and all that rubbish that is opaque. It costs money to collect.
Yeah.
You know, the whole point of universal credit was it make the system easier
Yeah.
and the administration cost would go down.
Yes.
Right? So do that. Make the bloody tax system simpler, but raise more money and tell people why you're doing whatever you're doing and show them the outcome,
Yeah.
right? And spend less on the NHS because we target the money better.
Yeah.
And then going back to my improve the health of the population thing, raise money to do it, raise money to tackle it, right? And target it in the right place.
And you'd spend less on management or on red tape because
Well,
you would look for savings in those, right? If you have a smaller budget.
huge- I mean, it must be the greatest opportunity we've ever had. You know, the government has said a lot about AI. Do I trust them to know what they're doing? I don't know. I don't know what I'm doing yet, but I tell you what, I'm learning every day, and it is an incredible thing. I would be looking to get more people from the private sector in and get closer to a few of the big tech companies in the world to say, not we'll give you a £3 trillion contract over 10 years to do this and that, but how can we use AI to make things much simpler?
Yeah.
Because there are so many inefficiencies
Yes.
within public sector, well, within
And why
and
can't
private
they use
companies.
AI to do that in NHS?
And they will do. They'll start to spot, you know, there's, as I understand it, drugs in trial that can get rid of cancer forever at the moment.
Yeah.
I saw that, read and felt completely two ways about it. Number one, wow, how magnificent. Number two, that puts the healthcare bill up by a huge amount. So again, R&D, I'm massive on research and development because it's what's done everything over the years. It's the best thing that capitalism has ever done.
Yeah.
Give people the incentive to, not that they just do it for money,
No.
but they should be
There's a
rewarded
passion
if they've
in it
done
as
it.
well,
Absolutely. And lots of people, you know, Tim Berners-Lee, World Wide Web, didn't capture any value from that. Jimmy Wales started Wikipedia and all the rest of it. It doesn't have to just be about money, but you put the money incentive there and things happen. You take the money incentive away once I've passed my level 4 PIP or whatever, and things don't happen.
Yeah.
And and some of that is psychological in terms of you can't work, you're ill, you're anxious today, so you can't go to work.
Well, we're anxious every other day. What's going to happen to us? We're still running a business.
Exactly.
We're still taking risks. And you know,
and don't give, if you give people, one of the things about people, low income families that is well documented is that it's the negative messaging that the kids receive that gives them the hardest time.
Yeah.
Because they get these negative messages so much more often because they can't, but also because it becomes a mindset
Conditioning.
trap.
Conditioning,
right?
right?
Exactly. Then they're more negative in their outlook towards life.
and the entitlement.
It's when
time.
you know the cheesy, if you say you can or you say you can't, you'll be right. Well, I don't believe if you say you can jump off a building and survive, you'll be right. You won't be, you'll die. But if you say, the one bit about that phrase that is very true is if you say you can't, you will be right. Because it probably means you're not trying.
Yeah.
You're not going to try because maybe you've been conditioned not to try. Maybe second generation, third generation unemployed. These are significant challenges. But what you don't do is put employers' national insurance contributions up so that we fire 200,000 people and put them into the
Is that
scrap
what
heap.
we've done?
Pretty much.
200,000
Pretty
people
much.
are fired, and
Pretty
now
much.
they're on
So
the
that-
welfare
well,
system.
they're jobs that are lost. They're not there and they're not created. The vacancies are lower. And when it comes down to it, all the research tells you it costs the government 30 to 40 grand to create a job. Because you go and do a project over here, and ideally you do projects that create revenue. So, for example, levelling up, we never say that anymore, do we? But linking cities in the north and suburbs in the north together makes tons of sense. Because it's ridiculous when, you know, I drive all over the country and I'm quite often in the north of England, and it's just insane what the difference is. But then you look at Manchester and look at the metro system they've built and stuff, and I live near Birmingham, and I'm humbled by what they've got in Manchester. Is so much easier
Ahead.
for people to move around. It's nice, it's clean, it's It's great. It's absolutely great. And we're a mess compared to that in Birmingham, which is a shame.
Let's start wrapping up. A couple of things I want to ask you, like maybe, like, what is your vision now for your business? I know you've fixed the country. We've fixed the finances. We've fixed the regulation. Now we're on the growth level. Productivity is going to go up by 1% at some point. But in your business, with your 850 traded properties, I know you're selling some. You're trying to buy on the buying spree.
Yeah.
What's your kind of vision? Do you have like a 3-5 year plan goal?
Yeah, I think the next 5 to 7 to maybe 10 years, I think he's going to see a significant growth now of corporations in the private rental market. And I'm talking people who are coming in with 100 million quid to get started.
The Black
Who've
Rocks.
got billions. They've got billions and billions, the biggest in the world. If you look at Holland, Germany, the US, they've all got between 10 and 18% of their rental sector is owned by
corporates.
institutions. Right, institutions.
And here is about...
It's about 2 to 3% at the moment. That's
Right.
of the rental sector. So it's a tiny fraction of the housing. And now, with the Renters' Rights Act, with everything in place, it's time for them to... They've tried build to rent. The yields aren't great. They're not getting the returns they were promised.
Yeah.
It's unviable.
Yeah.
If construction's unviable, build to rent is unviable. I'm not saying every
And
single
those
project
sort of
is
level of
unviable.
rents, because there's a limit, isn't it,
Of
for
course.
what people can afford?
Well, because when you see a build to rent, I don't know if you ever looked at them in detail when they've been underwritten, but they go out and say, let's say your average 1-bed flat in a nice town centre in England at the moment is £1,000 a month.
Yeah.
Right? They'll be underwriting them at 1,300 quid and saying, well, because some of it is, well, we won't have built them for 5 years.
Yeah.
Some of it is, well, downstairs we've got the concierge and he can look after
Cinema,
your Amazon parcels
gym
and blah.
and all of
Exactly.
that, yeah.
So you are getting added value,
Yeah.
but it's 1,300 a month. Well, that's disconnected from the rest of the market, realistically.
Yeah.
It's so far disconnected. It's not even a similar product. It's only we are trying to hive off the people who get the train into Birmingham and work for KPMG.
Yeah.
You know, those are the only
The
tenants.
0.1%.
The only ones who are going to be able to afford it, right?
Yeah.
Absolutely. So build to rent's not worked out that well for them because it costs money to run it apart from anything else. Secondary market's the only thing that's going to make sense because they've got that 5.5 million units to go after.
Yeah.
Like they've got real volume. Build to rent still only built about 175,000 units in the UK.
Right.
So that's not even, what's that, 3%?
So they're going to take
2%?
over the stock from the private
So they'll
landlords.
start, there'll be a big way in. So I may well have an exit to a corporate over that period. I think at the moment I've probably got a whole firm for quite a while and wait until the corporates are falling over each other to buy.
Yeah.
I'll watch that market
Do you
develop.
think that's a 3 to 5 year plan, you think?
Yeah, 3, 5, 7. I think probably something like that. I've always said I'll buy while it makes sense to buy. It still makes sense to buy today. It's, you know, with what inflation has done to house prices and where affordability is, housing is incredibly affordable to buy at the moment. And that's why, and now the first time buyers, and if we get the help to buy, okay, that probably will just be on new stock. And that does make sense to incentivize developers to build new build stock.
Yes.
It makes complete sense.
And you think that might be in this budget?
I do think it might be in this budget because apart from anything else, Rachel Reeves is buoyed by the fact that when they started to liberalise planning laws a little bit, despite what I've said about the Building Safety Act and things like that, they did get a 0.3% adjustment to growth in 5 years' time, included in their figures. I know that doesn't sound like a lot, right? But that's an extra
0.3%
15
towards
billion
the 1%
quid at the end.
productivity.
Yeah, exactly. So you're starting to look pretty good on that front. So I think that's an inevitability, and I've always had a philosophy of being smaller cog in a bigger wheel. That makes sense. I don't really have a desire to run as the active CEO of a REIT/fund. I'm not saying I wouldn't consider it, but I'm probably not cut out for public. I've got too much of a big mouth to be a public limited company director. I'm too opinionated to do that realistically, and I wouldn't mind just being a shareholder in something like that. But still, if I did exit, what would I do with the money? I'd probably still buy more property, right? Because that's where my skill
Maybe
set
a
and my
different type
passion
of
lies.
stock, maybe.
Maybe bigger stuff. Maybe.
Would you think about commercial at some point?
I mean, we've got some commercial property, and
mixed
I
use.
enjoy asset management. We've got one specifically commercial site which we've asset managed really, really well. I've enjoyed the process. I've worked with Rod Turner on it, and enjoyed.
It's a different type of deal, isn't it?
It isn't, Manni, because still what it came down to is for the asset management of this site to work, we had to chop big spaces up into smaller spaces.
CMO,
right? We had to. It just was the organic way to do it, to get tenants in, to avoid long voids, to do all the rest of that, to avoid huge business rates issues and things like that. CMO wise, so you still, now it's easier to chuck them out if they don't pay, but you still have we still have to take people to court, we still have to do this, we still have to do that, we still have the same problems with rent increase. So It's drastically
in a different,
similar, actually, when you're at the sharper end of the market. And it made sense for us to be at the sharper end because it was our first proper asset management deal.
And also,
coast
it's not
to coast.
it's not like a shelter won't be after it and say, there's not going to be that kind of regulation in commercial space.
No,
I think.
although having said that, you still got your ICRs, you still got your minimum energy efficiency standards. It still ticks up and up and up.
Yeah,
so
the compliance.
There is, it's the way of the world. The direction of travel is still the same. But you're right, it's not anywhere near as onerous, and you're not going to lose any sleep at night over commercial tenancies.
Absolutely. No, but look, so you're selling up, you probably end up buying a different kind of stock and do whatever. What else? So in terms of the person, like not me, but someone who's getting into property now, what advice would you give them with all this negativity around us?
So I would
as
say,
a buy-to-let, I mean, do you actually personally think buy-to-let is dead or do you not?
No, it's definitely not dead, but certain locations are dead. And if you want buy-to-let and you want sort of, I would always say to people, try and do a fairly vanilla one for your first one. There are things that have worked since long before probably even I was born, apart from vanillas, let alone before I started in property, like turning a 2-bedroom house into a 3-bedroom house. Beautiful evergreen strategy.
Yeah.
Always works, right? You just need to do your research and your legwork and
find out the value of a 2-bed versus a 3-bed.
See how many times it's been done on the street. Do that sort of thing. You can work out how to add value in those and that's just one way.
And sell it on. Okay, yes, it's not a seller's market, but rent it out.
Well, the old, what do they say? 3, 2, 1. Either buy 3, sell 2, keep 1.
Yeah,
keeps you. Why did I start selling some stuff? Because I wanted to rebalance how much gearing I had within the portfolio. If interest rates were going to go up. Be sensible around that. A lot of people are basically 100% leveraged when they start out. It's the nature of the beast. They're told to borrow money from here, there, and everywhere. Hopefully, it's maybe family money that's safe, that is secure, that they can afford to use. And if they're sensible, they should be fine with it. But at some point, you do need to re-gear. You need to grow, but you need to be cautious when you're growing as well. So I think it's absolutely as good. Look, what's the runway for capital growth in houses specifically? Pretty good. I think 25% plus over the next 5 years.
You think?
I really do.
Is that what?
And I think in cheaper properties, which ultimately every buy-to-let landlord is probably looking at getting into cheaper properties, that specific end, at least that sort of level of growth, right? Inflation adjusted, houses are cheap. Wage adjusted, they're cheaper than they have been since 2003.
Yeah, 2003.
Inflation adjusted, they're cheaper than they have been since 2013. And 2013 was the bottom of the cycle after 2008. Yeah. So you can almost forget 2013, to be honest with you, because it's just the dip downwards. You can go back and it's nearly as cheap as it was 22 years ago if you adjust for RPI.
With Ease AI agents, you don't need to spend hundreds of pounds on a solicitor just to hear no. You get instant clarity using Ease AI agents for all auction legal pack queries, and you can then go to a solicitor for a deeper dive. Not just that, Ease AI agents also gives you local planning comparables, planning history, and hotspot insights as well. You could try it completely free using your 300 free credits, and then 20% off your first month's subscription using Manni 20 as a discount code. Go to Ease AI Agents now to start your free trial. So you're saying in real terms, as an inflation adjusted, London's lost about 40% of their value of their property.
Prime Central has lost between 40 and 50. Yeah, incredible bath since 2014 or so.
And sort of general consensus from like the Midlands upwards north, do you think they've lost about 15-20%?
Not necessarily. Depends where you are. Some parts of the country are definitely ahead in terms of still ahead of because since 2015, the Midlands and the North have drastically outperformed.
Yes.
And when talking about land, as we were earlier, urban land, the nearer you are to London, actually the worse it's done. Whereas greenfield land in Scotland or in Wales or in various parts of the country has actually done quite well.
Yeah.
And still done decent levels of return.
So really, it's just London that suffered the most. The other parts of the country seem to be doing pretty well.
Expensive houses have suffered the most. And of course, London has a drastically higher concentration of expensive property than anywhere else. Yeah. But, Sandbanks hasn't done great. Salcombe hasn't done great.
Yeah, the higher end of the property market.
Yeah. Altrincham hasn't necessarily
But that's because we've pushed away deliberately ultra-high net worth individuals away. Non-DOMs have been thrown away.
There's lots of
wealthier people.
There's lots of
left.
silly things that have been done around things like, I read a piece of research that the average non-DOM spends about contributes about £900,000 of VAT a year.
Almost
because
£1 million.
Yeah, because they're spending an average of £5 million, having a great time.
Yeah.
You know, whatever that works
And
out as.
what have you done? Kick them out.
10
Send
grand
them
a
off
week,
to
whatever
the
it is.
sunnier
No,
climate.
100 grand a week. Yeah, exactly. And well, because they're
100 grand a week.
Look, they're mobile anyway. They're mobile anyway in their lifestyle. They have 5 to 10 wonderful houses around the world. They don't.
How can we bring them back? Or can we ever bring them back?
They're not going to live in Hyde Park. Well, it's trust, isn't it? Rachel Reeves still has a problem at the moment. Keir Starmer, I don't know. I think he's probably lost the dressing room. Although Rachel Reeves will go first, Keir Starmer, it will be difficult for him to come back from here. Not impossible, but difficult.
Do you think they're going to last the 5 years?
I don't know. I think there will be a lot of pressure when they see the polling. There's already polling of, if Keir was in charge, would you vote for them? If Andy Burnham was in charge, would you? And the difference is stark.
Oh, right.
Is already stark. So politics is politics. And when you're gone, you go. You know, Boris, I thought he was going to be the next coming of Winston Churchill crossed with Maggie Thatcher. And then suddenly, bang, he was just gone. You know, he was gone.
But he tried his luck. He tried his luck too many times.
He deserved to go. Don't get me wrong. But you never thought, you know, he was still the Conservative Party's biggest winner.
Yeah.
Why did they put him in the first place? Because they knew he would win the election.
Yeah.
And the rest of it,
People did love him.
Same as Donald Trump.
Yeah.
Was he going to win? He was always going to win that last election, right? Yeah. He was always going to win it. And he did. And the price you pay for that in terms of whatever, values, etc., it's a long-term price, not a short-term price. And the world thinks short-term.
But I like your sort of 5-year thing, that 25% over 5 years. That's positive. And I really like the fact that you actually think property prices will start to go up.
And rent growth is going to be strong, 3% plus. That's what we put into our forecast for rent growth.
Annually.
Because inflation is there, because the wages are getting pushed up in the rental demographic.
Yeah.
The affordability is there for that wage growth. So if you look at a lot of secondary markets in the UK, right, one of the issues I've always had with London is their affordability is at the top of their ceiling.
Yeah.
And what happens in the real world is they get 3 or 4 people into a 1-bedroom flat, and there's 3 or 4 incomes that can pay it reasonably well. But there's only so far you can go in terms of overcrowding and overpopulation. Whereas if you see a family in somewhere in the West Midlands, let's say, they might be paying £900 now for a 3-bed.
Yeah.
But their affordability is such that on the normal metrics, they can afford £1,200.
Yeah.
So there's headroom to grow into that headroom as the tenancy continues. And the whole point of a 5-year mortgage is it stays the same for 5 years. If the rent's increasing, you should be doing better. And hopefully in 5 years' time, there's a fighting chance the mortgage rate, the interest rates might be a little bit lower, hopefully they won't be a lot higher. Yeah. If we've solved some of the problems with the longer term and we look serious at this next budget, hopefully we will, or whoever is in charge by then looks serious, the bond markets will react. They love the world loves the United Kingdom.
Yeah, we do.
It loves the United Kingdom.
Absolutely.
We're a great country.
Absolutely. Bring the golden visa back.
Absolutely.
Or bring it. We never had one, actually. We need to bring a golden visa
we really
program.
do. We really do.
The whole world is doing it, apart from the UK.
We're letting Italy, steal non-doms and things like that anyway, with deals that make sense to non-doms. And it's crazy, but politics is crazy.
Have a flat tax, right? Have a flat tax for non-doms so they know where they're coming and where they...
Like I said, if you're collecting money from them in VAT, and the very thought of taxing them on their worldwide assets is so A, stupid, and B, arrogant, that it's just somebody. Why would I allow you to tax me on my assets that I've earned overseas, right, in other countries? I've listened to some very intelligent and erudite, as you can imagine, non-doms who've talked about this extensively, and it simply boils down to the politics of envy. And that was the worst thing. That when they came in, they had the VAT on private schools and the non-doms. It's all envy. And envy is so negative. Yeah. Why do it?
Is it the thief of joy, they call it, right?
Comparison is the thief of joy, right? Comparison but that's the same thing, because you're looking up at someone and saying, well, why have you... Do you want to look at that person and go, why have you got more than me?
Yeah.
Which is a little bit of a UK attitude, to be honest. Or do you want to take a bit more of an American attitude and go, well done, now how do I do that?
Good on you. Yeah.
I'd like to do that. Or... I'm really pleased you've done that. I'm not willing to make the sacrifices that you've made, because a lot of those people have made insane levels of sacrifice. And
no one says that, right? It's always, you got lucky.
Or the overnight success of 30 years. I've got a very successful business partner and friend of mine who says that all the time. He says, sure, I'm an overnight success of 30 years. and he's worked incredibly hard. And
absolutely.
he deserves to be where he is. And I'm not jealous of him. Why would
No.
I be? I get the chance to learn from him sometimes, and that's magnificent. That's the best thing in the world.
But listen, Adam, you have been absolutely amazing. We've solved the problems.
Yep, all sorted.
It's all sorted. Rachel, here we come.
Yep.
And honestly, such a great time. Learned a lot today from you. And thank you so much. I wish you all the best in selling your massive portfolio to a lovely REIT and make lots of money and go buy more property.
And absolutely same to you as well, Manni. Thank you for having me. It's been a real pleasure.
Thank you. Guys, if you enjoyed watching that, please do like, share, subscribe and comment for regular property updates.